You have diagnosed how new technologies will change future finance. And what are the technologies that are changing the future of finance that we should pay attention to?
Finance is almost always an industry that's at the forefront of technological adoption. Why? Because it's the business of money. And if you're in the business of money, you want to be as efficient as possible, and technology can be really, really helpful in increasing the efficiency. I would say for the future of finance, I think some of the most important things are going to be AI and quantum computing. Those are going to be really helpful for analyzing lots of data, for identifying outliers. And that's really good for identifying where there might be an investable opportunity. Oh, here's something, it's not behaving like the normal. This might be something special. This might generate value. If you're using algorithmic trading, which is formulaic, predictive analytics, that's an area where for many years that's been applied, predictive analytics, looking for pattern recognition, outliers, opportunities in that way. People who are market technicians, and I'm a chartered market technician myself, looking for certain trading patterns, creating AI formulas to identify trading patterns that give you buy and sell signals in markets. Using a classical computer, like the ones that most of us use today, right? Based on Turing machines that use binary code, ones and zeros, or in the future where we're using some quantum computers that operate with qubits, which have a third state of existence, right? Where there's ones and zeros kind of somewhere in between. That increases the computational ability of the user. But what it also does is present the opportunity to analyze data in a non-deterministic, probabilistic fashion. In other words, you're looking at data, you're trying to identify what is the most likely correct answer, or what is the least likely wrong answer, and that kind of through the process of elimination gets you to what an opportunity might be. I think blockchain technology is going to be very, very important for record keeping, especially in supply chains across distributed networks. The use of NFTs in supply chains, we're going to see more of that. Not NFTs in the artwork or the speculative trading NFTs, but as a way to mark individual products that can be tracked, traced, and monitored throughout the entire chain of custody of their supply chain as a provenance marker. We might see requirements, increased requirements for demonstrating where products come from, what countries they were made in, how they were made, what products were made ethically, right? Environmentally proving how they were made. All of this kind of record keeping could be recorded easily in a blockchain, and that could be accessed across a distributed network of users in a public way or a semi-public way, right? Not whether you're trying to ensure sustainability or ethical manufacture of goods, or you need to verify the safety of the goods in your supply chain. I think specifically, really important for Korea, ICT industries. I think about in the future, if you're in the United States, you may not be allowed to buy or use internet-connected devices that were made in China. Well, that means there's an opportunity for Korea to take market share from China. It also means that having that data provenance around the Korean-produced ICT products could become value add to demonstrating the provenance of those products.
Once strong cryptocurrency craze appears to have subsided a little bit. For example, in 2021, China outlawed virtual currency, sort of. So will cryptocurrencies continue to be an important means of wealth?
Look at Hamas, right? The terrorist organization in Gaza. They've used cryptocurrency to receive funds to engage in terrorist activities. And that's going on now, right? We've seen the digital Silk Road, right? That's been financed using various cryptocurrencies. This stuff has had some nefarious uses. There are opportunities and logic around what the value of a digital currency would be. The logic, of course, being, it's another kind of asset outside the fiat currency system, which could be a hedge against losses of value of fiat currencies, especially in a world with high levels of debt. We also see some investors, retail investors, moving into this space where people have conviction about it, but the prices have really big volatility. Retail investors are not always prepared for such big swings in these asset valuations. Look at cryptocurrency over the last 2 years. Big upswings, huge downswings, big rebounds. It's a very volatile asset. And it carries a lot of risk because it's not backing anything, right? There's nothing backing it. There's no tangible value to it. Now, central bank digital currencies, where you have a digital Korean won or digital dollar, and it's operated by the central bank, we're likely to see those going forward for a number of reasons. It'll increase transparency and KYC and AML, and the government will now know where more money's going. I think that going forward, central bank digital currencies will become more widely used. You're going to see that, I think, rolled out across many, many economies.
Korean government is considering a new legislation for ICOs. And how do you see the impact of ICOs on the economy?
I think for ICOs, we saw a big boom of them. I want to say it was 2017. There were a lot of ICOs. Not all of them had legitimate assets behind them or structures or business cases. And it became, to a certain degree, somewhat like a Ponzi scheme, right? Again, one of these other financial risks. How that evolves going forward in a more regulated environment, really depends, right? It might be an efficient way to transfer digital assets between law-abiding citizens in an economy. And if you want them to be, like, if the public wants to see ICOs be an effective means of trading assets that are digital, they may want those protections to ensure and defend the value. So I think there's going to be a trade-off. If you want to do ICOs, great. It's going to be heavily regulated to protect those investors. If you don't want the regulation, might as well go to a casino.
It is true that financial digitalization and technological change are creating new, unexpected problems. So what are the issues that the digitalization of finance cause that we need to be aware of?
There are going to continue to be and will increasingly be risks to retail investors as we see complexities of financial market trading and investing increase over time. You could have an over-reliance on technology and you just don't catch some of the ongoing risks because, oh, we just relied on the AI to tell us if something was wrong. But there was a glitch in the AI, someone deleted a line of code, no one's double checking it, and oops, now we have operational problems. Oh, if there were biases in the historical data and you put the data into your model and now you have a predictive function, well, garbage in, garbage out, and you may codify biases. You may codify them everywhere. That's a really big risk. That's a really big negative.
You said that the most likely future would be somewhere between robocalypse and robotopia. What strategies do companies need in the future where automation is really accelerating?
Robotopia, where automation, robots, they do all the work, and we all live a wealthy, blissful existence of abundance, and a robotopia where the robots take all the jobs and everyone becomes impoverished and everything is miserable. And it will, as always, depend on individuals. Do people embrace the technology? Do they get the education and training they need to maximize the value of that technology, to boost their productivity? Making sure, I think, education, embracing education as a way to make yourself a bit more immune from a robocalypse scenario. If I think about finance and past finance developments, Lotus 123 was an important technology that was the first digital spreadsheet. It was later surpassed by something almost everyone in finance uses today, which is Microsoft Excel. But the idea of a digital spreadsheet, when it was first released, to many people in accounting and finance, they were not interested in using a computer. They didn't want to use these spreadsheets, and that wasn't what they did. Well, very quickly, people who refused to use it were either out of a job or they came around quickly and decided to start using the technology, which is, you may say, I don't want to use that. But the truth is, if you don't, people who do will pass you by. The second thing I'd say is that while things like Excel are very helpful, you still need to know how to do math without it, right? All of us went through elementary school and high school and college. We were doing math by hand, not generally using spreadsheets, right? And of course, that's important because if a spreadsheet makes a mistake, sometimes things can happen, glitches can happen. You need, or you can also fat finger a number, as we say in English. You hit the wrong keys. You need to be able to eyeball when something doesn't look right. Now, that doesn't mean that you're doing all your calculations to check it by hand, but I know that 1,000,000 divided by 5 isn't 231.892, right? And so you can quickly identify really big outlier problems by eyeballing things. And that's really important. That's tremendous value. Now, because I've done those projects and I've done that by hand, I could also spot where there are problems, where I need to jump in, because the work might not be 100%. So this is really interesting because in the labor force, that means people need to be trained to exist and operate without the technology so that when they use it, they know when there's a glaring problem. And that makes you more valuable as an employee, because or as a business leader, or in whatever capacity you function, because you're using the technology as a lever. The trick is to only do that most valuable thing you can do and delegate the rest. And of course, technology, if you think about AI, it's just another form of delegation.
So overall economic environment, uncertainty and risk in business environment are increasing. So what kind of financial strategy does a CEO need in order to deal with such an environment effectively?
Most important thing right now, I think executives can focus on, especially CEOs, are fundamentals. And by that, I mean, you want to make sure to defend profit margins. right now, still in a relatively high inflation environment and in a high interest rate environment and in a tight labor market environment, you've got elevated OPEX costs and CAPEX costs. Everything is squeezing margins. Defending your profit margins really, really important. That's number one. Number two, be careful with riskier investments. And by that, I mean, there are some investments you can make that look like they're going to have a pretty solid ROI. Going crazy right now with making investments in more speculative things is not something I would recommend in a higher interest rate environment. The value of your capital has a much higher opportunity cost. So you want to be a bit more conservative in the investments you're making. I think there's a lot of opportunity to boost your productivity in Korean businesses. And I know the labor force is a challenge. Birth rates are a challenge. Population levels are a challenge going forward. The aging demographics are a challenge. Technology can help solve some of those problems. They might not necessarily be 2024 problems. Those are longer term. So I would encourage you thinking about the longer term solutions. Focus on AI technologies, smart city technologies, and anywhere you can do R&D in these, export those solutions will be a way you can help Korea win in the future.